Hello, everyone. This is Jeff from We the Individuals. Alongside me is Thomas, who is also a co-founder of the page. And tonight we have a special treat for you as the one and only Austrian economist and anarchist Robert Murphy is joining us here this evening. How are you doing, Robert?
Doing great. Thanks for having me.
It is a pleasure. Actually, it was, as I mentioned earlier, Team Brittany's video that I saw of you and those ladies. Actually, I was like, that's a good idea. And then that's how I got Jeffrey Tucker, and then eventually I'm talking to you now.
Well, great. I'm glad to be here.
I am too. So the first question I had was really just a basic one: is how was Porcfest, and what was going through your mind when you were debating David Friedman?
Well, Porcfest was great. It's the Porcupine Freedom Festival. For those who aren't familiar with it, it's sort of like the flagship event for the Free State Project up in New Hampshire. It's just a big camping festival, basically. And then as it grew, it was people who are, libertarian or voluntarist. They call themselves different things. And as it grew, it just became an opportunity to bring it. And they start bringing in speakers and bands and things like that as the crowd got bigger. So yeah, this last time it was great. We had a lot of fun events. Probably the surprise of the week was what was called Freedom Feud. So it was sort of like a takeoff we did of a Family Feud. With they had the software to project it up on the screen, so it really did look like the Family Feud board. And then we had various teams come up, but the questions were catering to people of that persuasion. So things
Right.
like what book got you into liberty, that kind of stuff. Those are the questions. As far as the debate I had with David Friedman, it was a little bit frustrating because he's obviously a giant thinker in terms of just standard neoclassical economics, especially of the Chicago school tradition, but also of anarcho-capitalism.
Yeah.
And so I was really hoping we were going to grapple and get down to some of the deep divides between more of a Rothbardian approach compared to the Friedmanite approach to anarcho-capitalism and also on economic theory. And for better or worse, I went into it thinking we were going to have more of a discussion as opposed to like a brawl, because that's kind of how I've been led over email to believe what he wanted. And it seemed like when it was unfolding that he was trying to win the debate. So that's fine. Like I say, but I think so. So what was I thinking? Just things like, I mean, to give you one example, I was trying to make an analogy of how Austrian economics works in the Misesian tradition, where you start with an axiom, the action axiom, and some auxiliary assumptions, and then you logically deduce implications from that. And so critics often say, oh, well, that's not empirical, so how can you learn anything that way? And I just made an analogy to geometry and said, well, that's what we do in geometry, and nobody would doubt that geometry is a useful thing to teach people, and that the method of logical deduction from axioms works in geometry. And so Friedman just said something like, well, I can't believe you're unaware of the fact that physicists have known for decades now that the universe actually doesn't obey the Euclidean postulates. And that was kind of annoying because I've known that since junior high. I read a lot about physics. I understand that, and that doesn't affect the validity of my point. And so whether he really thinks I'm that stupid and didn't know it, or was just trying to win the debate instead of acknowledging the validity of what I said and then trying to come back and point out something else. So anyway, that's what I mean when I say it's a little bit frustrating that I am pretty sure David Friedman knows that I know that the universe is not Euclidean in the way that physicists think about it, and yet that doesn't affect what the point I was trying to make. So in other words, it's like we weren't really trying to understand what the other guy was saying and say, okay, right, but see where you're coming from. But what I'm saying, it was more like, turn into just quick little jabs to try to make the crowd think like, oh, he got him on that point. And so anyway, it's just that's kind of the frustration I had with it, since obviously Dave Freeman is the pinnacle of his viewpoint. Since I had him there and we are going to have this discussion, and I knew it was going to be recorded and everything, I wanted to really get at the heart of it, and it seemed like it was. In other words, I know I'm taking a long time this answer, but it was kind of like kids in high school who had read Murray Rothbard and who had read David Friedman could have had the debate that he and I had. And so, I was hoping for more, to get deeper at the issues.
Yeah, that sounds like almost every bad Facebook political thread I've actually been in. That's going to be going on to YouTube soon because I'm kind of excited to see it.
Yeah, well, yeah, my understanding is so they definitely recorded all the major events at Porcfest, so they have that video, and my understanding is just, they had volunteers, like, people who for their day job do that stuff, record it and edit, and so it's kind of like when they can get around to editing it and putting it up on YouTube, they will, but they're doing it out of the, a donation, as it were. So I don't know when it's going to go up. Hopefully soon.
Okay. Yeah, I'm excited to see it, but how you described it, I'm like, okay, maybe I'm good with holding off for a little bit.
Yeah, I mean, I don't want to tell people not to go see it. I'm just explaining. I was getting really excited to have an hour long or however long we had discussion with David Friedman on these really two important issues. And then another thing too is right off the bat, he didn't want to talk about anarcho-capitalism, which had been billed as part of the debate. So maybe he just honestly misunderstood what we were supposed to talk about and wasn't prepared. But I'm just saying, I was really looking forward to going in there and having this real esoteric, deep discussion, and it devolved into something else entirely. So I'm not saying you shouldn't watch it, but it's not what I was hoping it was going to be. Put it that way.
So this is pretty basic, but you're obviously a Rothbardian, but as many know, but I wanted to know who your favorite Austrian economist was, or if there is an economist that was an Austrian that would be your favorite.
I mean, yeah, it's hard to answer a question like that. I'll just say a few remarks. The economist who has most influenced my career is Murray Rothbard, just because his writing style and the way that he didn't just focus on narrow technical economics, but looked at political economy and history and things like that. So in terms of who do I want to try to be like, in many respects, be Rothbard more than anybody else. But I think Ludwig von Mises was probably a more important economist, which is not a slight against Rothbard. I mean, Rothbard would probably agree with that if he heard me say that, just because Mises, had so many contributions that we sort of take it for granted. But I mean, right. He did the socialist calculation debate. He integrated micro and macro in terms of how do you use marginal utility theory to explain the price of units of money, the business cycle theory. I'm probably missing some other things too off the top of my head here, but just those contributions, any one of those would have made him a giant. And he did all those plus, just a very forceful defense of classical liberalism and so forth. But anyway, I suppose I did my dissertation on Eugen von Bombaverk, who is in some respects like the bridge between Menger and Mises. And so, I mean, that's probably my favorite Austrian economist, or my favorite economist, partly because it's, he's sort of obscure and I think underappreciated.
That's cool.
So anyway, that's my answer to that.
That's
okay.
Cool.
So I have a question related to Warren Mosler, who I know you're familiar with. You had a debate with him. For those of you who don't know, he wrote the 7 Deadly Innocent Frauds of Monetary Policy. I was watching a speech by him a little while back, and in it he said he calls the gold standard a self-imposed constraint, his words. Is this true in your opinion, or is this more of a government constraint than anything? What do you think of this?
Well, just to give a little bit more perspective, I think where Warren's coming from is he's saying, look, there's no, this is sort of an obsolete relic. There's no reason in the modern age governments need to worry about balancing budgets and financing because they can just print money. And it's sort of silly then in that framework to impose this arbitrary rule upon yourself, like, oh no, we're going to redeem U.S. dollars at a rate of such and such per ounce of gold. Why would you do that? Warren wouldn't think. That's just an arbitrary constraint. So that's where he's coming from. From my perspective, it's certainly not arbitrary, and it's a good constraint. In other words, you want limitations on government power, just like the Bill of Rights is a list of constraints on what the government can do, and I think that's good. So I'm not for the gold standard in the sense that I think it makes sense to have the government controlling the issuance of currency so long as there's some rule in place about redeeming it for gold. I would rather just get the government out of money altogether and have the market produce money. But the point is, given that the government's doing it, well then yeah, I want to have all kinds of constraints on what they can do, because the real danger is the government just printing up money and destroying the currency, something that has happened many times throughout history. So that's not just some idle fear. And even if they don't destroy the currency, it just makes it very easy for the government to finance projects through inflation. And so for the very reason that the government wants to not have constraints on it when it comes to money, that's why I want there to be constraints. Just like the government would like to be able to lock people up who criticize it, by the same token, the government would like to be able to print money whenever it wants to buy something and doesn't want to raise taxes or can't borrow for it. So that's exactly why you shouldn't give them that power, because you don't want them to be able to just buy whatever they want.
Okay. I have another question related to Mosler, and another one of his, it was a journal, I think, where I read it, but he says that private debt is less sustainable than public debt. Obviously, you would rather have neither of the two, but in terms of sustainability, do you agree, disagree? What do you think?
Well, I'm not that one. I'm less certain about exactly what he means by that. What he could mean is, it's sort of related to the previous point about the government can spend whatever it wants, and so in one respect, if the government owes somebody money because they've issued a bond in the past, it's not like there's any danger of the government being insolvent and not being able to pay it off. They could just literally print it up and redeem the bond that way. And so that's the sense in which government debt is perpetually sustainable from his point of view. So I just think that's a very dangerous way of looking at it. That what it means, so let's say the government, without the option of inflation, wouldn't be able to pay off a debt, wouldn't be able to service the debt, would have to default. That would mean because it couldn't raise taxes or borrow more without the public revolting or something, or destroying the economy. And so you don't solve that problem by just printing up $100 bills and paying the bill off that way. All you're doing is more, stealthily robbing the general public in order to pay the government's debts. And so you're not really hiding the pain, you're just transferring it in a way that's harder for the public to perceive. Because the public, if you explicitly tax them and say, well, we got to tax you because we got to service this debt to these bondholders, the public can understand what's going on and then say, okay, well, let's stop running such big deficits then. But if you run the printing press and now the public's still paying for it, but because prices are rising, then it's not as obvious who the culprit is. And they might get mad at speculators or these greedy businesses or the labor unions or oil sheiks for raising prices, when really the true explanation is the government's running the printing press.
Okay.
All right. So really, everyone knows that you have this thing with Krugman wanting to debate him, and personally, I could read you taking apart his sophisms every day. It's like my morning coffee. Now, aside from Keynesianism or whatever comes out of Krugman's mouth, is there another economic philosophy that you have wanted to take apart? Because personally, I would love to see you write something on the land value tax, Georgism's land value tax, but I want to know if there's one other philosophy aside from Krugman where he talks about that you love to or would want to go after.
Yeah, sure. And thanks for the kind words. To me, right now, if I had a bunch of, if I were a tenured college professor, which I'm not, I'm a consultant, so I gotta keep doing stuff to pay the bills. But if I had a bunch of free time and could do what I wanted, I would really delve into what's called market monetarism. Some of the leading proponents of that are Scott Sumner, David Beckworth, Bill Woolsey, and so these guys are. They claim to be the modern representatives of Milton Friedman's monetarism, and what makes them unusual is they're saying the reason the U.S. economy is in such a slump right now is that Ben Bernanke has had the tightest monetary policy since the Hoover administration. And so to me, that's just crazy. But the thing is, they're gaining a lot of followers. Specifically, Sumner's saying what the Fed should be doing is targeting what's called nominal GDP growth, and that if the Fed used that as its policy goal, things, we wouldn't have been in trouble in the first place. So a few years ago, I started following Sumner, and he was just a curiosity to me. And by the way, he's a perfectly nice guy. I mean, it's not as opposed to Krugman, who I think can be a jerk sometimes. Sumner's a perfectly nice guy, and he's really smart and everything. And Krugman's smart too, but the thing is, it's that Sumner is now gaining more and more credibility. I mean, he was just on Larry Kudlow's show the other day debating Peter Schiff. So to me, Sumner is much more dangerous than Krugman, or at least on the margin. In other words, Keynesianism is out there. It is what it is, and I'm not worried about it absorbing more people. I mean, I think today's, the population of Keynesians is what it's going to be, whereas this market monetarism is growing fairly rapidly, I think, among certain circles of people who otherwise might be interested in Austrian economics. And so that's why, and like I say, in Sumner's worldview is more, even though to me it's crazy, it's insane in the same way like that some guy who thinks he's, King Henry, and no matter what you say to him, he's got a very quick, glib response to explain to you why your argument's wrong. And no, I really am King Henry. And that's what I mean when I say he's insane, that like he's got a whole internally consistent worldview to explain, no, this is what I mean when I'm saying Bernanke's had a very tight monetary policy. Like he defines tightness in terms of nominal GDP growth. And so it doesn't matter that Bernanke has tripled the monetary base. It doesn't matter that interest rates have been basically 0% for years now. That's all irrelevant. What matters is Sumner's preferred policy goal. So that's what I mean, that he's kind of a tough nut to crack, and I would, if I had a bunch of free time, would spend it dealing with that.
That's cool. What was your opinion on the land value tax?
I pretty much subscribe to the Rothbardian critique of that.
Yeah.
That, I mean, if you were just gonna, if you're gonna tax something, I suppose you could make the case that that particular tax is a lot better than an income tax or that kind of thing. So it's not that I think Henry George was totally crazy, but I do agree with Rothbard that the Georgists are wrong when they seem to think that that wouldn't be a distortion, and that the I forget what they call it, the excess land value is a pure economic rent that doesn't correspond to anything that's earned. That I think that's wrong. That just location, you want to give people the incentive to discover those property sites and develop them and that kind of stuff. And if you had such a tax in place, you would reduce the incentive of people to discover land that was not being used in its highest possible value.
Oh, okay. That's pretty much what I always thought about it was, Rothbard said it was the least bad tax, but that doesn't really mean much to me. And I've always tried to come at them with how the economic calculation problem does apply, because it applies to where there's no market prices, and they kind of throw out semantic terms and arguments on, it does apply because of X, Y, and Z, and I kind of get drawn into the same things that you're describing. Yeah.
So I think, as with many areas, Rothbard basically settled it in my mind.
Okay. Next question was, another basic one was, what is your favorite contribution that the Austrian school has brought to economics?
Well, my view might have been different if you had asked me 10 years ago, but for sure right now, I think what they bring to the discussion that other economists at best pay lip service to and at worst think is a useless detail is the notion that the economy has a sophisticated interlocking capital structure, and that when you're looking at things like the business cycle in particular, you really can't just look at aggregate figures of like total consumption and investment spending and try to derive policy that way. And this has come to the fore recently in the debate over the next Fed chair to replace Bernanke. Right now the running's between Janet Yellen and Larry Summers, and a lot of people in the blogosphere, professional economists who are really good in many respects, people from Chicago and so forth, they're flipping out because Larry Summers last year had the audacity to say, I'm not sure that we actually want to lower interest rates anymore, because you got to wonder about the quality of the projects that businesses would invest in when right now real interest rates are negative 60 basis points and that we're going to push them even lower? Like, what kind of project is a business not willing to invest at negative 60 basis points, but maybe at negative 100 basis points now all of a sudden looks like a good thing? Do we want them making those investments? And people are just ridiculing Sumner's remark and saying, oh, that's an Austrian kind of concern, as if that shows how dumb it is. When to me, I can't believe we're even having this discussion, that people are, that are laughing at the claim that you don't want businesses investing in stuff that at a 0% rate of return wouldn't be profitable. So that's what I mean, that the Austrians think like that, whereas other economists, when Sumner's brought this up, it was like, oh, wait a minute, let me even think about that. Do we care about what they invest in? Where, with other economists, it's more about let's boost investment, and they don't worry about, well, let's make sure they invest in the right type of projects, because in their models, that doesn't even get in there. Their models are so crude and coarse that all you have is stuff like total investment. You don't have things like, well, what kind of things would you invest in at one interest rate versus another, and you want to make sure those projects are all compatible over time, or else you're going to paint yourself into a corner and have another crash. Whereas the Austrian approach, that's exactly what the business cycle is in the Austrian view.
Right. Okay.
Well, I wanted to kind of bounce off of that. Lately, it was just recently released that Federal Reserve, Bernanke, they're going to leave interest rates near zero, but they are going to slowly trim back on the $85 million monthly quantitative easing, depending on how employment and all of that reacts. What did you think about that?
Well, a couple things. So first of all, I'm glad that the Fed at least is hinting that they're going to back away from the brink. That I was worried for a while that so long as the official consumer price indices weren't going through the roof, they were just going to keep promising more and more asset purchases, until the economy got fixed. It seems like, well, now we're buying $85 billion a month. The economy's still pretty bad, so let's ramp it up to $100 billion a month. That's what I thought they were going to keep doing until the dollar crashed or something, and that was the only thing that would make them turn back. So I'm glad that they at least are hinting at pulling back from the edge. What's also funny about this is when they made that announcement, the nominal and real yields on U.S. Treasuries all rose pretty significantly, and that was funny because a lot of people, not only the Keynesians but the market monetarists, had been ridiculing Austrians who were saying, oh wait, the reason interest rates are so low is because the Fed's buying up all the bonds. And they were saying, no, you guys are idiots, that's not what it has to do. And so then when the Fed says, oh wait, we're going to not buy this treasuries as much, then all of a sudden treasury prices fell, meaning the yields went up. And a lot of, at least to his credit, Scott Sumner said in his blog, I have absolutely no idea why this is happening. The yields, but still, it doesn't faze him at all. No, he's sure that his analysis is the right one. So, like I say, it was interesting because you got guys like Krugman and Sumner who are lambasting guys like me and Peter Schiff, saying, oh, they were so wrong about price inflation these last 4 years. Clearly, we shouldn't listen to these idiots. But, Krugman was openly predicting accelerating deflation, and that obviously didn't happen. But that's fine. He just, wages were stickier than I realized at the zero bound, or whatever he said. He's just some tweaking of his thing. It's not like he changed his policy views one iota. And Sumner as well was bashing Sheldon Richman when he was suggesting that the Fed, by intervening in certain asset markets, was giving gifts to the politically powerful and rich insiders. And Sumner was blasting him and saying that's a very crude view. And then, like I say, that sort of naive Austrian view seemed to be playing out when the Fed says we're going to cut back later this year, and then Treasury yields rise. So that's why it was good in two respects. That I'm glad they're at least saying they're going to back off. I hope they follow through, and that it was just funny to see bond prices respond in the way that the standard Austrian analysis would suggest, and that the other people were saying we were very naive for thinking that.
Right. All right, and this is my last question. As we all know, the housing bubble was built after the dot-com bust and book boom followed by a bust, softening the blow, basically. After this housing bubble has collapsed, are there any bubbles that you see right now, maybe multiple bubbles or maybe just one particular bubble that's in full swing right now, kind of softening the landing and will lead possibly to another economic downturn.
Well, yeah, and this dovetails right with the last question and answer. Is I think U.S. Treasuries are in a huge bubble right now. You know, the federal government has been issuing record amounts of debt the last few years. I mean, a few years ago, the federal deficit as a share of GDP hit about 10%. That's the highest it's been since World War II. All right, so you know, in normal circumstances, the federal government running up deficits of that size, you would expect to see interest rates on treasuries rise, but you didn't see that. And so this is, you know, guys like Krugman were running victory laps saying, see, you guys don't know what the heck you're talking about. And I think part of it is, well, it's because the Fed came in and was monetizing the debt. And so investors believed, oh, well, no, we can go ahead and lend money to the government and we'll be fine because, just like Warren Mosler tells us, we know we're getting paid off because they can just print money. And so I think
Right.
We're in a very unsustainable situation right now, and then investors at some point are going to realize either the government is going to explicitly default on the treasuries, which would make interest rates rise, or they're going to realize the only way they're paying these things off is by running the printing press, in which case price inflation rises, and then you demand a higher interest rate just to recover your purchasing power. So that's my answer to you. Is there may be other bubbles, but for sure I think U.S. Treasuries right now are in a bubble, and that 20 years from now, looking back, people will be astounded that why were investors so trusting of lending to the federal government. Just like right now, we can look back at 2005, and we can't believe people kept, major investment banks, really smart guys hiring all the physicists and so on with their fancy computer models. How could they have been so stupid as to keep piling into real estate? And I think that's the mistake. We're going to realize a similar sort of mass delusion swept the bond markets this time around.
They'll probably blame it on the right person wasn't in charge or something like that.
Oh yeah, no, you're absolutely right. I mean, it's no matter what happens, it will always be, if only, in Krugman's blog, it will only, it'll be, well, it's because they pulled, Obama caved into the deficit hawks and he cut spending prematurely. Or, oh man, it's because Bernanke chickened out, and so he announced a tapering of QE3, and that's why this all fell apart, and then you had this price inflation. You know what I mean? So yeah, it's never going to be, oh yeah, actually we were wrong and the Austrians were right. That will never come out of Krugman's lips or Sumner's lips. And it's partly, in the case of Sumner, it's partly because, like I said, his theoretical framework is such that it's almost impossible for it to be falsified. Which is fine, but I don't think his followers realize that, the way he's spinning things, he couldn't possibly be proven wrong.
That's true.
The way he's defining his terms.
That's true. And to switch gears a little bit, there's I've heard only within the last couple months of some feedback about Mises.org or the Mises Institute in general that, Rothbardians have taken over. I myself don't mind speaking as a Rothbardian, but I want to know if you have heard that objection, and if you have, what you thought about it, and if you see it remaining that way.
Yeah, well, it's certainly true that the faculty who teach at Mises University and what's called the Rothbard Graduate Seminar, and even that name shows it.
Yeah.
They're all, I'm trying to think of all the people. For sure, they're all very sympathetic to Murray Rothbard, and my guess is most, if not all of them, would openly describe themselves as being Rothbardians. So that's certainly true. I mean, the Institute was founded by Lew Rockwell, who was a big fan of Murray Rothbard, and Murray Rothbard was the academic force behind it when he was still alive. So that's not surprising that that's what it would turn out to be. So, it's kind of funny that people often, say, oh, you guys are a cult and stuff like that, and when Rothbard disagreed with Mises on key issues. So it's, I've heard people accuse us of being a cult of Mises, and then they also accuse us of just doing whatever Rothbard thought when Rothbard and Mises disagreed on some key issues, such as anarcho-capitalism and monopoly theory. So it's, it depends what the person's saying. If clearly you can get up and criticize Murray Rothbard, and the Quarterly Journal of Austrian Economics, the Journal of Libertarian Studies, is full of articles saying Rothbard was wrong on X, Y, and Z. My dissertation is based on a critique of Ludwig von Mises's pure theory of, or time preference theory of interest, and that's, Rothbard believed that as well, and I quoted from Rothbard to make my case. So it's kind of, really what it boils down to is, a lot of the people who worked for the Mises Institute really liked Murray Rothbard, and if that's the charge, then yes, we're guilty. If it means you get banned if you criticize Rothbard, well then no. Walter Block has probably written 200 articles criticizing Rothbard. I'm not exaggerating.
That's true. And you touched base on the Rothbardians being a cult, which was kind of related to my next question, which was what a common objection or misconception about the Austrian school would you say you do receive the most, since you're kind of in the spotlight and probably get more of it than people like me and Thomas.
I guess probably probably the one that's the most the complaint that's the least or the most misinformed, put it that way, is the one that says something like, Austrians just have their head in the sand and they don't, they're unscientific because they don't look at data. I think that's wrong on several counts, because on the one hand, to just assume that, this goes back to what I was saying with the debate with David Friedman, I think it's a false premise to say, unless you go out and use data to sort of verify or guide your theorizing, then that means you're being unscientific, because that principle would not work in many other fields that we all agree are quite rigorous and should be taught and so forth. And so it's, we're partly disagreeing on what actually you're doing in economics. And when it comes to things like free trade and minimum wage laws and stuff like that, I think most practicing economists, certainly free market economists, what they do with their students is not appeal to the data. They try to use intuition and thought experiments to get them to see the inner logic of what they're saying. And then, sure, you go and you look at real-world illustrations to make the point, but it's not that you're proving the case by looking at statistics. You're making the case based on introspection and using your own deductive reasoning. So I think that's the biggest misconception. But also, too, it sort of implies that the mainstream economists give better guidance in the real world than the Austrians do, and I think that's crazy. Like, just to give you one quick example, when it comes to the issue of so-called austerity versus stimulus spending, there's all sorts of historical examples I can give you of countries that were in a recession and had a debt crisis, and their governments responded by sharply cutting spending, and they did fine. They were out of the recession 18 months later. And there's all sorts of examples of countries that were in a crisis and ran huge deficits, and then were still mired in a depression or recession years later. And there's no example of a country that did what Krugman said and then it worked the way he said it would. There's not a single example. The best one they can point to is World War II, when the private sector was worse in 1943-44 than it had been at the depths of the Great Depression a decade earlier. And so when they say, the economy did well, they mean like the official GDP numbers went up. But you can't point to a country that just ran big government deficits and then all of a sudden everybody was enjoying prosperity the next year. There doesn't exist such a case. So it's funny that Krugman would assure his readers that he's got history and facts on his side, and whereas the Austrians, with their recommendation to cut spending, are just got their head in the sands and rely on astrology, when it's the other way around.
That's true. Is there any popular tenet or a conclusion of the Austrian school that you currently have doubts about, and that some future Austrian might overturn, and what it might look like?
I'll give you two things. So what my dissertation was, like I said, it was a critique of what's called the pure time preference theory of interest. So I think the standard way that most Austrian economists right now will talk to you about how interest rates are formed in a market economy, I think that there are a lot of problems with that, and moreover, that it's not really consistent with the rest of Austrian economics. And so, just to give you one quick example, they'll say, like Mises literally says this in Human Action, that says time preference is the ratio of want satisfaction in the present compared to the future. And so he's literally dividing utilities, which in any other context, you'd get a curse put upon you by Walter Block for doing that. And yet that's what the time preference theory of interest led Mises to say. Now you could say, oh, well, no, he didn't really mean that, but it's hard to get around that. And then that's the inner logic of what it is. But then another thing that's kind of a quibble on my part, but I think it's important, is a lot of people like to say, a lot of Austrians like to say, Mises predicted that the Soviet Union wouldn't work, and when it collapsed, it was proven that he was correct, that that socialism is impossible. And I think that that's wrong on two counts. One is, I think really what Mises proved is that economic calculation is impossible from day one under socialism.
Right.
And so I think you're misunderstanding the nature of what he showed if you're saying it was an empirical prediction about the viability of a socialist regime. And then also, it seems kind of weird to say he said something was impossible, and since it only lasted for 70 years, he was right. That seems kind of weird to me. That if we're saying he said so, if you're thinking the viability of the USSR is an indication of his prediction, it seems weird that it seems like he had a pretty big margin for error if we're going to say something that only lasted 70 years is vindicating his claim that it's impossible. So I think it's important to be more accurate about what he said, because I feel kind of silly pointing at a 70-year country as one that shows it's impossible.
That's true, because there's so many factors that kind of go into it. The last question that I had, and this is pretty much what inspired the interview, because it was with Team Brittany. It was near the end of the interview, after talking about Bitcoin before karaoke. You briefly discussed working, as far as reducing the state, working inside the system versus outside the system. You touched base on a good point when you brought up how you see the arguments on both sides, and one particular thing that stood out was when you said, how can we bring about, change if we can't have our ideas implemented through voting? But I'm conflicted because I'm an outside the system kind of guy, and I kind of see, I agree with you in terms of, politics and bringing about change through in the system, but one side, agrees, how can we implement change if we can't vote it in, but how do you reconcile that with working outside the system and saying, if we got enough people behind us outside the system, then we could implement change? So I was wondering if you could build on what you said a little bit.
Sure. So just to bring your listeners up to speed, as you say, they had been asking me about this issue of, given that we think we have a good insight into why the present system doesn't work, and the move towards a freer society would benefit everybody, except the people who are currently in the ruling elite. And so how do we move from here to there? And that's a thing that people argue about. And so I was saying that, just to be clear, I do not think a political solution is the way to go. So I don't get into looking at the different candidates running and saying, oh, should I put my weight behind this guy or that person? And if we just get enough people in there. And it's partly because just my experience, it doesn't look like it's very effective to me, or at least it doesn't seem like it's a good use of my time. It might be a better use of somebody else's time. I don't know. I mean, every individual has to make that decision. But for me, I think what I can do is explain these ideas in a way that the common person can grasp, and try to convince more people that way. And so what I was acknowledging, though, is that a lot of people hear that kind of stuff, like, oh, focus on education and that kind of stuff, and they say, okay, sure, we need that, but what good is it to educate the citizens if then they don't go to the ballot box and vote for people who better reflect, this higher understanding, this education? So, I mean, it's, again, it doesn't need to be an all or nothing, but I kind of think it's not as crystal, or it's not as clear cut as that. That, for example, if the government tomorrow were going to rule, come out with an announcement and say, I'm just picking something ridiculous, that okay, the president and all the senators get to go on a runaway getaway with every spouse in America. That the president can take anyone's wife he wants and take her on a junket, and nobody can complain. That's perfectly legal, and that's because he's the president. I mean, people would flip out, and it wouldn't matter about the Constitution. It wouldn't matter about voting or whatever. The government wouldn't dare do that, because if they tried to do that, there would just be a revolt, right? You know, like it would just the people surrounding Obama would resign. I think a lot of the the army and stuff, the generals and things would not implement that order. So it wouldn't. You know what I mean? It's just what the public believes as no, you do not have the right to do that as the president. So there's all kinds of stuff people think the executive branch can do, like, coming into healthcare, regulating CO2 emissions, fuel economy standards, raising taxes, putting in price controls, perhaps even, Bloomberg's flirting with pushing the envelope. Are you allowed to regulate the size of soda thing? But if they said something like that tomorrow, that government officials could take anyone's wife or, husband if it's a woman or whatever, you could see how people would put their foot down and say no, and the reason the government wouldn't dare try that is ultimately they would lose their power. And so that's what I'm saying, that it wouldn't be, oh no, if we do this at the next election, that we're going to get voted out of office. That wouldn't be the reason. It would be, if we do this within a week, there will not be a functioning federal government. That there will be mass, outrage at this, and our own people will resign and not support it. So that's kind of what I mean, that ultimately, if you can get public opinion to agree that, the government really has no business meddling with money, the way right now most people still agree the government has no business taking somebody's wife on a junket, then that stuff would fall away. And I don't really care about the particulars of how it would fall away, but it would if that was just the general presumption, irrespective of whether, so we got to get a caucus together and send representatives to Congress to vote for such and such and introduce H.R. 174 to roll back the Fed. I mean, those are just trivial details to me in terms of comparison to getting the public to agree, yeah, the government has no business meddling with money, which is such an important part of our daily lives.
So you kind of think it's maybe a blend of both, maybe like, because you mentioned Ron Paul was a great educator and brought those messages to the platform, so you think it'd be a kind of a balance of both politicians bringing those ideas to the spotlight and people like you and Jeffrey Tucker who are outside educating people, at least so the ideas keep flowing?
Well, let me put it like this. So Ron Paul's a great example that he was important because he educated people and brought so many people into the liberty Austrian economics movement. As a politician, he was completely ineffective. So people think it's funny when he, was the sole dissenting vote on something. Some measure would pass 400 and such to 1, and he'd be the one vote. And people would say, that proves how great he was. And yeah, it does prove how great he was as an individual, but it epitomizes how bad he was as a politician. You don't affect federal policy by being the one guy to vote on something and getting outvoted by 400 of your colleagues, right? So, he didn't change federal policy in any way directly. It was only because he had prominence. So now you say, okay, but then shouldn't people be running for political office in order to get that platform like Ron Paul had? And I think that that's a risky gamble, and that if more people started thinking like I did, they would attribute less significance to somebody who was running for office. In other words, I would rather have major league athletes or movie stars or really accomplished musicians or CEOs of companies that were really innovative learn our ideas and then come out and speak about them to their respective fans, rather than somebody who's famous because he's running to become president.
That's a good point. Okay, well, that's all the questions that I had, and Robert, I know you're a busy guy, so I wanted to really, really thank you for taking your time to, to do this interview with us. I was actually really excited for a while. Some more kind words. You're actually currently you're my favorite economist right now, which is one reason why I did want to have this interview in the first place. So, again, thank you for taking your time to do it with us.
Well, thanks for having me. I'm glad we got the interview done before I, said something that disappointed you, and then I might be your second favorite economist. So, that would have been awkward.
Next to Henry George and Krugman, of course.
All right. Well, thanks for having me, guys.
Thanks,
Thank you.
Rob.